Hello and good evening, everybody. Welcome to tonight's session. If you can hear me, can you just say yes on the comment? Yeah, before I start, welcome everybody to tonight's session. Thank you for joining us. If you can hear me, can you say yes on the comment? Thank you, Patrick. All right, looks like we're all set to go. Thank you so much, everyone, for joining us tonight, where we're going to talk about uptrend and when is the opportunity to actually go into an uptrend. And what we want to achieve today is basically to look at one technique that you can use immediately after tonight's session, and you can apply it to basically catch an uptrend. And now we all know that it's always easy to identify a bullish trend, right? Because prices are already moving. The question is, when would be the right time to actually catch that particular trend? Normally, it's quite difficult to find a trend when it's beginning. And of course, on hindsight, it's always best to actually enter before the trend starts, right? But the fact is that most of us will only be able to identify the trend only when it's developing, right? And the problem with an uptrend is if we're going to catch an uptrend, normally we'll be buying at higher prices because an uptrend is defined by prices going higher and higher, right? So if we do not know what we are doing, we may actually buy at higher price and eventually sell when the price starts to come down. Then that's not what we want to do, all right? So, and this session is all about how you can actually find a technique to find an opportunity when the price is in an uptrend, but of course, we're not going to catch the high. So this webinar is basically going to be about this, and so this webinar is brought to you also by Afin Huang Investment Bank. We would like to thank Afin Huang to actually bring this webinar together with you guys, with us, to you guys. All right. Before I start, how many of you already know a little bit of technical analysis? That means you know how to read some charts. Can you put a 1 on the comment? Because today's session is going to be a lot about charts lah. All right, so we're not going to talk about fundamentals. We have been doing quite a number of series of webinars on fundamentals and even market trends. We talk about unstoppable trends, and so today is basically more about charting. So it's more educational today. All right, thank you, Barry. Okay, let me just go through with you this first before we start. Whatever that's being shared here today is for educational purposes only. It's not intended as any investment advice. So should you look for investment advice, please do look for a licensed investment advisor. All right. Okay, thank you, Patrick. Thank you, Arul. Thank you, Lau. Okay, so looks like we are set to go. Please do share with your friends who are trading as well if you think that this may benefit them. Please do share tonight's live stream, yeah? So let's take a look at the first part, which is an uptrend, okay? So we know that an uptrend is defined by higher highs and higher lows, right? And if you're going to buy in an uptrend, of course, when prices are moving higher, if you're going to buy at the current price, we're going to be buy at very high prices, right? And that's what we do not want to do. So when would be the best time to actually buy? Now, in our previous webinar, we also talked about how you can actually use an opportunity to find opportunities, right? When the price pulls back to a support level. So this one here is a little bit different. So if you're going to buy, for example, in an uptrend over here, okay, it's always easy to identify an uptrend, but question is this trend going to continue going higher, right? Because there are two ways that the market can move. It can continue its bullish trend, or it could just turn and reverse into another trend, right? So if you're going to buy here, for example, if the price comes down, then we'll be in trouble, right? And of course, if the price do go up, then we'll be happy. Now, the problem with buying at this price is when we buy at a high price, normally our risk would be higher, right? Because the chances of price pulling back, and for those who are inexperienced, when the price starts to pull back a little bit, you get scared, and we get stopped out before the price starts to move again, right? So that's why we need to see where can we actually find opportunities to enter into a trend. Okay, so the easiest part is actually identifying the trend because it's already the past, right? What we see on the chart, they are all historical. We can't trade those prices anymore. Okay, so that's why I said when you look at hindsight, that means when you look at historically, it's always easy to identify. Yes, I can buy at the low and sell at the high, buy at the low and sell at the high. But when it comes to the current price, where you don't see the future, right? When we don't see what's going to happen next, that's going to involve risk whenever you make a trading decision. Okay, so the most difficult part, but the most important, is to identify future trends. Okay, that's what we want to try to achieve, lah. Right? And of course, today's session, we're only going to take a look at one particular technique. But if you do want to go and explore further, you should also look at the context of the particular trend. That means you probably need to study a little bit deeper and use other indicators to see whether the trend is likely going to continue or not. All right. Now, we also need to identify the characteristics of an uptrend. Okay, that means when we have a particular trend, there are certain movements that shows what kind of trend are we looking at. All right. So in a market or in any particular instrument that you're trading, the price don't go up or go down forever. All right. Like in this case, for example, if you look at the, let me just put a pointer over here. If you look at this part over here, when the prices are going up, certainly there are more buying strength than selling strength. Okay, so here if you look at this particular chart, I put two different arrows over here. One is a short green small arrow, and the other one is a thicker blue arrow. Now the thin arrow represents short-term traders, all right, and the thicker arrow represents longer-term traders or investors. Okay, so basically there are many different kind of players in the market. Some of them are short-term, some of them are long-term. Some of them are even trading intraday, right? That means they buy and sell within the same day. It could be some who buy and hold for years, okay, for long-term investors. But to simplify things, I'm just going to divide this two groups into short-term traders and long-term investors, okay? So if both long-term and short-term traders are buying, all right, and then the price will start to go up because not many people is actually selling. They are selling, but the selling pressure is weak, right? We have stronger buying strength because two of these groups are buying. And as the price goes up, who will be the first one to sell first? Okay. Remember, short-term traders look at short-term movements, right? The moment they see profit, they will start to sell. So when these short-term traders start to sell, okay, the price will start to come down a little bit. But as long as there are still longer-term investors who think that the price can even go higher, they will continue to buy, and that supports the price from going lower. All right. And as the price goes up again, those who haven't finished selling, those short-term traders who have not finished selling, they continue to sell. And in that selling environment, the long-term investors continue to buy. So that again prevents the price from going lower. So when we have these two groups having different opinions, okay, we have what we call a correction. So a correction is a technical term, right? Or a consolidation. So when we hear consolidation or correction, what does it mean? So it's basically a consolidation between the traders, right? It can be buyers and sellers. So when we have a consolidation, once we have finished that consolidation, the price will start to move into a direction. Either it's going to continue its trend or it's going to turn downwards. Okay, so how do we know? Is that if the price continues to go higher, it simply means that the short-term traders have stopped selling. All right, because there's no point selling anymore, because whenever they sell, the price cannot go down, so they think it's going to go higher. So now both of them have the same view again, right? The short-term traders and the long-term investors have the same view. They think that they should be buying again because the price is expected to go higher, and then the price starts to move again. Okay, and same thing, right? When the price starts to move higher, the short-term traders start to take action again, right? They start to sell, and then it moves into a correction, right? So in this second part here, instead of the price continuing its trend, it started to reverse downwards. Why? Because even the long-term investors, okay, are thinking that the price is already quite high, and therefore they also start selling. And of course, when both of them start selling, then the selling pressure becomes more than the buying strength, and the price starts to come down. Okay. So we need to understand these characteristics over here of a particular trend to know whether this particular movement is going to continue into an uptrend, or is it going to reverse. Okay, and that's where we look at patterns on the particular price trend. All right. Now, if you guys have any questions at all, you can just post the questions. I'll try to answer them. If it needs to be answered immediately, then I'll answer them immediately lah. All right. So if you look at this movement, so this whole thing is an uptrend, right? What we do not want to do, for example, if you look at the current price is already at 122, we do not want to buy at this price. And the price can go higher, right? The price can go higher and higher and higher. But of course, as the price goes higher, if you continue to chase the price, eventually you buy at higher prices. Okay, and if the price starts to correct downwards, then you're in trouble, right? Because if it turns the other way around, then you're going to lose money. Now, whenever the price moves upward strongly, we tend to have corrections. Remember consolidation, right? Because like here, for example, you look at a small triangle like pattern over here. As the price goes up, you see it starts to move sideways because the sellers start to sell, but there's also support from the buyers that prevent the price from going lower. All right, and this correction is very short, right? Because it only takes, like, if this is a daily chart, one candle there represents 1 day. So here it takes about maybe 2 weeks before the trend continues again. All right, and as the price makes a new high, it moves into a correction again, and this time the correction is a little bit longer, right? This one takes about a month before the trend continues again. Okay, and as the price goes higher, the correction starts again, but this time it's a longer correction. Okay, this one takes probably about 2 to 3 months before the price continues its trend again. Okay, so the question is right now, when the price is moving into an uptrend, when should we consider, should we enter or not, right? So the best time is to actually consider or look at that particular counter or any instrument that you're trading when the price moves into a correction. I always basically give an example of trying to catch a moving bus. All right. So we look at the bus is moving, is moving into a direction, is actually moving. And if you try to chase the bus, there's a very high chance that you're gonna fall off. All right. It's better to actually wait for the price, or sort of wait for the bus to stop, okay, to stop moving, and to enter into the bus when it stopped moving, when it's idle, it's not moving. Then your chances of falling off is lesser. Okay, but we want to make sure that the bus that we actually are going into is going to the same direction or not. All right, so we look for clues when we're in the bus to see whether it's going to the same direction or not. Okay, so in charts, in technical analysis, when you look at price movement, it's the same thing. When the price moves into a correction, we want to look for cues, right? We want to look for clues to see whether the price is still going to move into the same direction. All right. Yeah, Michael Ching is asking, should we add RSI to have some guidance, buy entry or sell out of the market? Now, I'm not going to cover RSI because RSI is another indicator altogether. In fact, I've actually covered RSI in the previous webinars. So you can try to scroll back, I think about 3 months ago. I think the recording should be there, right? Or you could go to Afin's website or Facebook to also look at those videos, all right? Now, one of the things that I do not want to do is try to combine so many indicators, because if you put too many indicators, and especially if you put conflicting indicators, you will never get a decision. Okay, so you need to know how to apply or what indicators to actually use when you make a trading decision. They have to complement one another. It cannot be the opposite, because Every indicator is designed for different purposes. All right. So same thing here. We have price moving upwards, and if you look at this part here, this green correction here, the short correction here, it continues into an uptrend. But in this bigger correction here, what happened was the price, instead of continuing its uptrend, it started to move into a downtrend. All right. So our opportunity comes when it is inside the correction. We want to look for clues to find whether this trend is going to continue or not. Right. Same thing if it's a bigger correction, we also need to look for clues whether this correction is going to end up with a reversal or a continuation of an uptrend. All right. Of course, later I will also share with you or give you some case studies to actually see how you can apply this later on. All right. So what we want to look at is basically a chart pattern formation in an uptrend. That means when the bus stops, when the price stops going higher, it will start to move into a correction, and that's where we look for patterns. All right, and these patterns repeats most of the times. All right, why? Because it basically tells you the psychological behavior of the market. Okay, and if you can take advantage of the ability to read the price behavior through the charts, then you will have an advantage. Okay. So what we are looking for is called a triangle pattern. Now, for those who know charting, I'm sure you learn about triangle pattern. All right. So if you look at this particular price trend characteristic, we all know that it's moving into an uptrend, right? The highs are getting higher, the lows are also getting higher, but it comes a point when you look at this part here, the highs are not going higher. Instead, it's actually going lower. And you can see at the bottom part as well, instead of the lows getting high, right? It is still getting high, it's still getting higher, but the slope, right, or the momentum or the rate of change in its upward movement is starting to lower. Okay, why is that so, right? Um, why price don't make a new high is because remember I told you earlier about the selling pressure, right? Because when the price starts to when the short-term traders start to sell, the price will not be able to go higher, but because the long-term investors are still supporting it, and therefore the price will not be able to go low as well. All right. So at the start of that formation, right, when the price cannot make a new high, okay, it will be quite wide because the correction is not over, right? The buyers and sellers have two different opinions, and therefore we get a bigger spread in price. Okay, but as time goes, you see that the correction, the highs and the lows get narrower. It simply means that the market is getting less interest in this particular stock because there's not much movement. And normally here is where you see volume starts to go down as well. All right. And this would be the best time. This is when the bus is stopping, and this is when we should get into the bus. And of course, also find clues to see whether this bus is going to continue into the direction that we want to go. Right? Because if it goes the other direction, then we do not want to stay in the bus. We better just hop out and get out and find the next bus. Okay. So this pattern here forms a correction. Okay, and this is how it looks like. Okay, of course, the price comes into an uptrend. Okay, so it's very easy to find stocks that are in uptrend, right? Because you can just look at price moving upwards. But the question is, when do you get ready, right? So you get ready when the price moves into a correction, and that correction here forms like a triangle pattern. Okay, in order to have a triangle pattern, you need to identify the two highs. We call it the swing highs or the pivot highs, right? And also at the bottom, you need to have two lows. So you can see here that the highs are getting lower. It simply means that there is some selling pressure, because if there is no selling pressure, the price would have gone into a new high, right? And you can see here as well, the lows are getting higher. Why? Because there is still support. Okay. At first, they are buying at this low, and then they continue to buy, but even at a higher price. So eventually, one of them will give up. All right. And when you draw a line that connects the two top here, okay, and draw the line moving exponentially forward, that will form the resistance line of the triangle pattern. Okay, resistance means this is where this is the price where it's probably going to attract sellers, because it has attracted sellers at this high, it has attracted sellers at this high, and because the pattern is going downwards, all right, so we're going to expect sellers whenever the price goes to this resistance level. Okay, and when you draw a line that connects the two bottoms, then of course it basically shows you where the support line is. All right, the support was here initially, and it gets higher. And of course, when you draw a line, it becomes like a linear projection of where the support level is going to be. Okay, now these support and resistance levels are your clue. Okay, so the bus is stopping right now. Okay, I need to know right now whether the bus is going to move into the direction that I want. In this case, I want the price to continue its bullish trend. So how do I know whether the price is going to continue its bullish trend? Is when the price is able to break above that resistance. Now, why is that so? Because remember that resistance is where we expect the sellers to sell, right? But if the price is able to break above the resistance, simply tells me that there is no more selling over there. All right, the selling is over. Why? Because we expected the selling to be there, but it's not there, and therefore the price may continue. Because if they are not selling, then what do? They will start buying also lah. All right, because they're gonna expect the price to go even higher. All right, and of course the other way can happen as well. What happens if the price breaks the support level? Right, instead of going higher, the price comes down. Okay, if it still stays within the support and resistance level, it simply means that the correction is not over. All right, but the moment the price breaks below the support level, it simply means what? Remember that line, that support line is where we expect the buyers to be supporting the price, right? But if the price breaks that support level, it tells us that there are no more buying presence. Okay, and therefore we're going to expect the price to fall, because again, if they don't buy, means these longer term investors will probably also turn into a seller, and when both of them sell, the price is going to come down or reverse from an uptrend to a downtrend. All right, so simply put, all we need to do is to identify these patterns. Okay, but of course it takes some practice to try to identify these patterns, because we don't it's easy to identify a pattern that has already completed. That means the price broke that triangle pattern resistance and already moved, because you can clearly see them on the chart. The challenge is always trying to find during that formation. All right, in this formation, that means the price hasn't break that resistance or haven't break the support level. This is where the bus stops, because the moment the price breaks the resistance, the bus is already moving. Okay, or if it breaks below the support, the price or the bus is also starting to move. Okay, but of course, when it breaks the support, it moves into the opposite direction, direction that we do not want. All right. So when we have a triangle pattern, okay, when the price breaks above that resistance, then of course we expect the price to go higher. Okay, it basically shows that the selling pressure is over, and therefore the price is expected to make a new high and continue going higher. So I'm sure the next question that you ask me is, if it goes higher, how high can it go some more, right? We'll come into that in a short while. All right. And of course, if it breaks below the previous low, okay, or if it breaks below that support line at the bottom, then we're going to expect the price to go lower. Now, the beautiful part about chart patterns is it's able to give you price targets. Okay, the targets are basically analysis that's been done by, of course, technical analysts and also traders over time, right? That target is once you see that pattern, okay, and the pattern after confirmation, after the price breaks, for example, the resistance level, there's a very high chance that the price is able to reach its target. All right, so the good thing about chart pattern formation is it's able to tell you the price target, unlike other indicators, right? Because other indicators will tell you, okay, this is the time to buy, but it does not give you a target price. Okay, yeah, it will only probably tell you a sell signal once the price starts to move. Okay, because the indicator is like it's a mathematical formula, right? It basically just follows price movement. So what happens here is this. So once we have identified a triangle pattern, remember you need to have two highs, at least two highs and two bottoms to form that triangle pattern. You can't have two high and one bottom. The formation the formation is not done yet. Okay, you need to have two highs and two lows, and of course it moves into opposite direction lah, right? The highs are lower, the lows are higher. Okay, so once we have done that, then we can draw a line, these dotted lines here. Okay, that forms the resistance of the triangle pattern, and the dotted lines at the bottom forms the support of the triangle pattern. Okay, so we all know that once the price breaks above the resistance, okay, then we're gonna expect the price to go higher. Okay, so the moment the price breaks above that resistance is the time where we could make a decision whether to buy or not, because the bus is now starting to move. It's either you want to jump into the bus or not. All right, but the indication is this: because it breaks above that resistance, you're going to expect the price to go higher lah. All right, so that's why most of the buying decision comes the moment the price breaks above a resistance, and that's when you see the volume will start to increase. And it's a good thing if the volume start to increase, because more and more people are starting to buy as well. All right, and so the moment the price breaks above the resistance, this will be your perfect timing to enter into a bus. Okay, now bear in mind that of course it's not 100% foolproof lah. It's not that you get in here the moment it breaks resistance, 100% that is going to go up, right? There's no such thing as 100% lah, because if it's 100%, if the price is going to go up for sure, all I need is one single trade, right, to make all the money I want. Okay, if I'm 100% sure. But of course, if you over time, you'll find the probability will be higher lah. All right, you are looking about probably 50 to 60%, depending on the market, right? Because in tough markets like this, if the if the market trend is generally bearish, then of course your probability of winning will not be good. But if the market is generally bullish, okay, the percentage of winning can go as high as 70%, 60, 70%. All right. But the most important thing, okay, is not the percentage of winning or losing, but also the winning against your losing ratio. Okay, I think I've talked about that as well, because you need to consider both of the winning percentage plus also the winning against your average ratio. That means whenever you win in a trade, you should be winning more than your losses, right? If that's the case, even with a 50% winning probability, that means let's say out of 10 trades you win 5 times and you lose 5 times, you are still able to profit. Why? Because every single win is bigger than your losses. Yeah, that's for me, it's more important. All right, now moving back to this, so how do we calculate the target price? It is very simple. Right, for a triangle pattern, you take the first pivot high and the first pivot low of the triangle pattern. Okay, you take the difference between the pivot high, the highest price at the top here, and the lowest price at the bottom. So let's say you get X, right? 10 cents, for example. Let's say X is 10 cents. Okay, so the target price will be, you add the 10 cents from the breakout of the triangle, which is here. Okay, so if you add 10 cents from here, then your target price will be up here. Okay, like I said, later we will do examples lah. All right. Yeah. Shamim is asking, how could you tell if it's a false breakout? Okay, of course we will also use some other indicators to confirm that breakout lah. All right, but you know what? All indicators will have false breakout. You just have to get ready for it lah. Okay, there's no one foolproof indicator. Okay, for those who have been following me, you can see that we do have classes on trading, and I update on a daily basis, so they will know and they will see, that not all the trades are winning trades. Okay, in the bad markets and in especially tough markets like this, there will be more losses, in fact. Okay, but they don't lose money. Okay, why? Like I said, your winnings are more than your losses. Okay, so we always have to be prepared for this false breakout. It may, all right, because sometimes, you know, price can be manipulated easily and legally, right? All you need to do is to break, someone to just spend maybe a few 100,000 ringgit or a million ringgit to actually push the price to break above the resistance and looks like it's going up. And then all those traders who look at the price chart will start to jump in and buy as well. And that's when those guys who manipulated the price will start to sell. So the reason why they want to do that is because they actually want to sell, but they want to sell at higher prices, right? So they purposely break that resistance. The price goes higher, everybody is chasing, and that's when they sell, and the price start to come down again. All right. So those are some false breakouts. And of course, if you when we talk about patterns or even any indicators, these are just indicators. Okay. Most importantly is that how you manage your trade. What is your trading plan whenever you see a pattern or whenever you see an indicator? All right. So you need to have a plan, right? If you're going to buy at this price, if it comes down, what are you going to do? Are you going to buy some more, or are you just going to wait for the price to go down below the support and then sell? There are many ways to do it, right? But your trading plan is going to be different, and most of the traders' trading plans are different. They have their own plans. Okay, if you want to go more advanced than this, then when you talk about trading plans, it can be more complicated. That means it can be not just one entry price, it can be multiple entry prices. It can also be multiple exit prices. Okay, but this is basically, I'm just showing you this indicator so that at least once you know how to use this, then you can slowly devise your trading plan and also continue to, to make your trading plan better over time lah. Okay, so this is the fundamental, right? You get a breakout, that would be a confirmation that the price is moving into an uptrend. Okay, and then you can basically sell at the target price. Okay, again, you can have multiple target prices because this target price may be a little bit conservative. You can put a more aggressive target price. Maybe you look at 1.5 times more than X. Okay, so if X is, let's say, 10 cents, your first target price can be at 10 cents. And your next target price, let's say 50% more, it can be at 15 cents higher. All right. So multiple. So you need to basically understand the basics first. Then slowly you devise a trading plan or develop a trading plan, and you slowly improve it over time. All right. So this is an example of a price that is in an uptrend that starts to move into a correction. The bus is stopping. Right. It's still stopping. It's not moving yet. And once we have that two highs, okay, here is one, okay, and here is another one, and two lows, here is one, and here is another one, you can already start to draw those lines. Because here, when the price goes sideways into a correction, you can see where the support and resistance are. All right. The reason why we wait for 2 points at the top is because we want to see that resistance trend, right? Whether it's sideways or whether it's going down. Same thing with the support as well. Okay. So as long as the price stays inside this red line, that means the correction is not over. The bus is not moving, right? There's the consolidation is still going on. So how do I know when the price is going to go up? Is when the price starts to break above this red line. Okay, that means if it breaks above the red line, which is currently at 405, for example, right? 405, it means that the price, it means that the resistance is not there anymore, and therefore we expect the price to go higher, right? If you look at the bottom part here, the red line, that will be at 370. Okay, so that will be the support line. If the price breaks below the support line, it simply means that the buying support is not there anymore, and therefore we expect the price to go lower. Okay. And normally, if I'm going to buy, let's say at 405, when the price breaks out 405, we can safely place a stop loss here at 370, because remember that 370 is a support, right? So in a case where we have a false breakout, right? When the price, let's say, go to above 405, it goes to 410, it goes to 415, it won't go to 420, for example, all right? But then the price starts to come down. Okay, if the price starts to come down, and it can come down because some people may take profits, but as long as it stays above the support level, right, there's still a chance for the price to reverse and go even higher. Okay, you need to give the price some room to move lah. Okay, in order for it to develop a trend, because the price don't go up every single day. All right. it tends to go up, down a bit, go up, down a bit. So that movement, that volatility, we need to give it enough room, not too big, also not too small, right? Just enough for it to form that uptrend. And of course, there are other tools to identify how you should, how much room should you give for a particular price movement. Okay, so before you wait for the price to break above 405, you can already start to calculate the target. Remember, so you take the difference between the first high, and here I already plot here at 412. That's the first high. The first low is at 362, and therefore the difference is 50 cents, right? So if you take 50 cents and you calculate it from the breakout at 405, your target will be at 4 ringgit at 455, right? So that means if I'm going to buy when the price breaks above 405, I can buy at 405, 406, or 407, or 408, maybe up to 4 ringgit and 10 cents. It doesn't matter, because even if I buy at 410, right, 4 ringgit and 10 cents, theoretically I should enter the moment the price breaks 405, but sometimes we cannot get at that price. Even if I buy at 410, there is still a room for the price to move up another 40 cents, right? 45 cents, because the target price is at 45 cents. Okay. So I just have to wait for the bars to start to move. Yeah. So I need to wait for that clue, right? If it breaks below 370, then I'm not going to buy. If it breaks above 405, that's when the bar starts to move, and that's when I'm going to buy again. Because the moment the price breaks above the resistance, I'm expecting that bullish trend to continue. Okay, so like in this case over here, you can see that the price actually continued to stay inside that triangle pattern for at least another 2 more days before the price starts to break and go higher. All right. And it takes up here, if this is a daily chart, so it takes about 1, 2, 3, 4, 5 to 6 days before the price hit the target price, and that's it, right? If your plan says that you have to exit at the target price, then you can exit and take that profit. And this is a very short-term profit. All right. Now, these patterns you can also use for both short-term and long-term. Okay. So on a daily chart, it's considered short-term because it takes days or maybe even weeks before the price hit the target. Okay. Now, imagine if you try to identify a pattern, okay, on a monthly chart or a weekly chart. So it takes months for that particular pattern to move to its target price. Okay. You can even go to a even shorter term, like a 5 minutes chart. That means every candle is formed after 5 minutes, every 5 minutes. Okay, so that one within minutes, the target price can be reached. All right. So again, depends on what kind of trading or what kind of trader you are. Are you going into the short term, really, really short term movement, or you're going into a daily movement? Now, when I started, I used to do a lot of intraday trading, in and out, in and out. You have to monitor the markets almost like a full-time job, right? But as I've over time, I actually try to find a trading strategy where I only need to depend on a daily chart. Daily chart is easier because you only look at the market when it's closed, right? Because the daily chart will only be formed after the market is closed. And then from 5 p.m. until the next morning at 9 a.m., you have all the time to look at it and to decide what will be your decision the next day. All right. If you're looking at a 5-minute chart, every 5 minutes you have to wait and look for opportunities and make a decision. If you want to go even longer term, if you put a weekly chart, it's even better, right? Because you only look at the charts on a weekly basis. You only look at the price chart when Friday ends. Okay, and then you have another 2 more days before Monday market open again. Okay, so daily chart works for me, so I don't really need to monitor the market all the time. Okay, I have time to actually plan for my trades the next day and just execute the trades the next day once I have an indication whether to buy or to sell. Okay, so let's take a look at some case studies. Okay, if you have any other questions, you can type those questions down. Okay, basically this is what I'm sharing with you guys. After this, I'm just going to share with you basically 2 stocks, right, that I've browsed through. There are, although market is bearish at the moment, right? You look at our index is going down in the past few weeks. But you look at longer term, It's basically not moving anywhere, like it's going sideways, and now it's at the support level of that sideways movement. Okay, but there are stocks that are in an uptrend. Okay, so these two counters here are stocks that are in an uptrend. I can only find these two that meet that criteria, meet that pattern. Okay, okay, can find two stocks that are now forming that triangle pattern. Okay, now if you guys want me to look at the stocks, like for example PK for example wants me to look at DNX, I can. I'll just put a chart over there. You can ask any charts if you want to. I'll just put a chart there, and then you can immediately see whether there is a pattern or not. Okay, I'm not going to analyze those particular charts that you put in. Okay, I just want you to answer whether has the bar stopped. All right. Number one, in order for you to apply this technique, the first thing is that the particular stock has to be in an uptrend. It cannot be in a downtrend. If it's in a downtrend, like Shamim says, if it's in a downtrend, then you probably have more false breakouts. Okay. If it's in an uptrend, because everybody is looking at the price moving in an uptrend, if the price breaks that resistance, then everybody start to jump in again, and that's when the price can go even higher. All right. So you need to find stocks that are in an uptrend. So I'll take a look at the stock that you are mentioning. PK, you have DNX, and Ingyam want to look at FPI. All right. So now the thing about trading in whether you're applying technical analysis or fundamental analysis is that once you have a plan, it is much easier to trade. All right. For example, we call this a setup, right? It can be a triangle setup, it can be a wedge setup, it can be a double bottom setup, it can be a inverted head and shoulder setup, it can be a moving average setup, right? You can have multiple setups lah. Okay, but the things that you already have these setups, the setups for me is like traps, where you put into the market, and you want to see which trap currently has a victim. All right. So you just lay it down there and just wait for the right opportunity. If you don't have a plan or a system, or you don't have these setups, then every day we will try to look for opportunities. Okay, trying to identify, use other indicators, and try to analyze. Eventually, we will not be able to trade. All right. So this is one of the setup, right? The setup is basically to look for triangle pattern, and if I can just browse through very fast, right? If you're already experienced enough, if you do a lot of practice, you can browse through very fast. 100, 200 stocks, just browse through and look for patterns easily, right? Like what I've done here is I'm able to identify two patterns, and we'll take a look at this. Okay, so this is up to yesterday's close lah. All right, I only got the data up to yesterday's close. There are only two counters that I can look at. So what we want is this, right? Price is now moving into an uptrend, and you can see here that it's moving sideways for a correction. That means the bus is stopping for CMSB. Now remember, there are two ways the price can go, right? It can either continue to go higher, or it break below the support and go lower. Okay, so if you look at this part over here, if I'm gonna draw a line that connects the resistance, you see that 150 is the resistance. Whenever the price approach 150 in this sideways correction period here, right? The moment it goes 150, you can see people start selling, and it has been done 3 times, right? 1, 2, 3 at 150. Okay, and if you look at the pivot lows, you see that the pivot lows are still going higher. It means that there is still support for this counter. Okay, and when you draw a line that connects the tops and the bottoms, you get a triangle pattern. Okay, all right. So now, question, right? If I want to know whether the bus is going to continue its bullish trend, its direction, the correct direction, which price should it break? Should it break above 150, which is the resistance, or I will buy when the price breaks, let's say, below 140, which is this support. So this is a chance for you guys to also interact with me. You can just type it down. Break above resistance 150 to buy, or break below 140 to sell. Okay. Okay, so PK says 150. Anyone Anyone else want to try? Don't worry, you're not going to lose money by trying up here. And we'll also take a look at the price performance today, because this is up to yesterday's closing price, right? Okay. So basically, thank you so much, PK. Thank you so much, Alex. Vena. So the question is this: right now we have a triangle pattern, right? Which means that the bus has stopped. This uptrend is in a pause right now. So if I want to buy, what price should I buy? Should I buy when the price goes above 150, or should I buy when the price is inside that triangle? That means still within 140 to 150, or should I buy when the price goes below 140? That's the question. Okay, 140 sell. Now, if you bought this share, maybe if it goes below 140, then you can sell lah. All right. So here I'm assuming that you haven't bought the share. Okay, the price is already going an uptrend. Of course, on hindsight, I'll say, the price is currently trading at 141. I'll tell myself, oh yeah, it's better for me to buy at 105 lah, right? Where it was the lowest, or even buy at 120. Okay. So Ingyam says inside triangle. Okay, so Vena, all right, slightly higher than 150. Okay, so remember 150 is that resistance, right? Is that resistance. So if the price cannot break above 150, that means the resistance is still there. All right. And if the price stays inside the triangle, like what Ingyam is saying, okay, we are already making a decision before the bus move. Okay, we are making a decision before we see a clue whether the bus is gonna go into the direction that we want or go the opposite direction. All right. So if we make a decision inside the triangle, we are being a little bit more optimistic that the price can eventually go higher without any indication that the price is going to that direction. All right. So if you want to be a little bit more conservative, I want to wait for the price to break above that 150. All right, like Patrick says, okay, so Patrick also says about 150. Vena also says 150. Why 150? Remember, 150 is very important because that's where the resistance is, right? Breaking above 150 indicates that the resistance is not there anymore, and therefore we expect the price to go up. All right, so the confirmation price, okay, will be the price breaking above 150. Now, this is where you need to also look. Now, again, based on experience, you also need to see, right, if the price breaks 150 and it goes to 151. So when the price goes to 151, it means that it's already broken, isn't it? 150 is already broken. But you also have to look at when it breaks 151, what was the volume? Is it because of just one trade or two or three trades, right? But if it continues to trade 150 and 151 and 151, there are many trades being done at 151 and 152, then that, with good volume, then that will be a good indication. I do not want to make a decision when there's only one or two trades that breaks above 151. Okay, so this is something where you can refine further lah. Okay. So this is theoretically, again, I will buy when the price breaks above 150. Now, before it even goes above 150, right, I can already start to calculate the target price. Okay, so I know the high is at 150. So I put a dotted line here. The first low is at 135, right? The first low here in the triangle pattern. The second low is up here, which is about 138. So 135 is the first low. The first high is the same high. In fact, is at 150. So if you take 150 minus 135, the difference is 15 cents. All right, 15 cents. So if you take 15 cents and you add it from the breakout, which is 150, your target price will be at 165. So that means if I'm going to buy at 150, all right, and above, I can buy at 151, 152, all right. Yes, Ingyam, to be safe, right? We want it to break above 150, at least with a good volume lah. Okay, we don't want just one or two volume. even if the price already gone to 152, then it's okay, 152, because there is still a chance for the price to go up another 13 cents, right, to go to 165 target. Okay, but make sure that it breaks, and it breaks 150 really hard. Okay, so target price will be at 165, and of course support will be at 138. Okay, let's say at below that triangle. And over time, the support level will go higher and higher and higher. That could be like a trailing stop. Right? Today it may be at 138, but tomorrow it may be at 139. Then next day maybe at 140, and so on. All right. So your risk becomes lower as the price continues to go up. Okay. So this is basically the case study, and this is yesterday's price, right? So later we'll take a look at what's the current price. So this one on Friday it closed at 141. Okay, and if I look at today's price, today the price went 1 cent lower, so it's still inside that triangle, right? But it's hovering near the support, which is quite dangerous, right? Because the moment the price breaks below 138, okay, or 138 in this case, if you want to be more precise, the support is 138 not 140, right? 138. If it goes below 138, then we know that the buying support is not there anymore, and we're gonna expect the price to go lower. All right. So that's where the target price is. Now, let's take a look at the second example. So we have another counter that has started to move into an uptrend in September, right? There could be many reasons, right? Where price goes into an uptrend. So here we can see the highs, the low. You can see resistance clearly at about 3 ringgit for this particular stock, right? It hit one time at 3 ringgit, unable to go higher. And on yesterday, the price tried to hit and break above 3 ringgit again. It closed lower, so that forms a resistance at 3 ringgit. And you can see that in the support, you can see that support is going higher. Right? So this is again a triangle pattern where the bus is stopping. So the question right now is whether it's going to continue going higher, right? And so the clue is that if the price is able to break above that 3 ringgit, okay, it simply tells me that the resistance is over and the price should be able to continue higher, right? And the bottom line will be the bottom support line here will act as a support. Okay, so 3 ringgit will be the price where I want it to break and make sure it breaks hard. Then only I will consider getting in. Okay, and if I do get in, even before I get in, I can also already look at the target price. Okay, so the high is 3 ringgit, and the low, the first low at the bottom where you draw that line that connects the two bottoms here, the first low is at 240. So if you take 3 ringgit minus 240, the difference is 60 cents. Right? So if you take 60 cents, you add from 3 ringgit at the breakout, then your target will be at 360. All right. So remember, if it's still inside that range, that means it's still in a correction. All right. So this is where you get, right? 3 ringgit is your confirmation. It has to break above that 3 ringgit. Okay. Break hard. With at least some good volume, not 1 or 2 trades. Okay. So you look at target, so 3 ringgit plus 60 cents. Remember, 60 cents is the difference between the first high and the first low. Okay, then you get 360. And support line, currently, if you look at the price, okay, the support, if you look at the current day, and the line here will be at 270. That's where your support level is. Okay. Yeah, so when I say put a support level there, that will be the best support. Okay, remember, we want to give it some room to move, but not too big, right? Because we know that there's a reason why it's called support, isn't it? Because that's where we expect, if the price falls to that line, we're going to expect the buyers to come in again, right? But if there is no indication of buyers coming in, that means the price goes below the support at 270, then you know that the support is not there anymore. Support is not there. It's like you try to go to war and then there's nobody at the back of you, right? That's when you also should also surrender. Okay. So that's where it is. Okay. So right now, what's Encom price? Let me go and check today. Okay, so Encom has come down as well. Encom has gone to today's price is at 275. Right, still inside that triangle, right? It hasn't break below the support, right? Because support is 270, right? So today it closed at 275, which is about few cents lower, right? Basically, it's down 6 cents, right? It's down 6 cents today, lah. All right, so it's still inside the triangle, so you have to wait. Okay, so at least now, so when we have a trading plan or trading setup like this, then first of all we identify the setup, and then we already can calculate the target price or whatsoever. All you need now is to wait for the right timing, right? That means to wait for the price to break above that 3 ringgit. Okay, now don't worry, this you can download these slides. I'll basically share with you how you can download the slides for tonight. All right, and if you came in late or you need more, you need to view the video again, you can always go back to the Facebook or where you're watching right now, because this video will be up. It will be recorded and it will be on Facebook or on YouTube. Okay, the one that you're watching right now. 271 as the last second high. Or this one over here. Okay, so if I'm going to draw this line, okay, I'm just going to make it bigger here. Okay, so if I'm going to draw this line here, you already have a breakout, right? Because I'm sure the volume is quite high here. That confirmation is actually at 285, right? Not 271. So you look at this part here, right? So here we already have a breakout. That means if you were to trade this, you have gotten in already. All right. If you use that lah, again, if I miss that, because remember I scanned this on Friday, but if you scan this, let's say if you scan this on Monday, right, or last Friday, right? If you scan this on last Friday or Monday, you already have a breakout actually here. Okay, that means you're already in. Okay, target is still the same, but you have to revise a little bit, because you're not going to add from 3 ringgit, but you're going to add from the breakout at 285, right? So 285 plus 60 cents, your target price will be at 345 lah. Okay, so if you follow this line, you are already in a trade. That means you already bought at 285. Okay, and your support will still be around. Support will still be at 270 lah. Okay, so again, it depends on when you scan, right? Because if I scan, let's say yesterday, then this thing there is still a resistance. All right, there is still a resistance. It has to break, because if it can't break 3 ringgit, that means it's probably just going to stay sideways. But the fact that it is really broken above this level, there's a high chance that it can break above 3 ringgit and go higher lah. We'll see how it develops. All right. So again, depends on where you see. Sometimes this could be a false breakout, right? If I were to actually enter that trade here, or it could be a good price to enter, because instead of waiting for the price to go above 3 ringgit, now I'm already buying at 285. Right? I'm buying at 15 cents lower. Because you just monitor this and see how it develops. Remember, this is a case study. It's not a buy or sell call. We are just doing a case study. You can just monitor these two counters and see, how it develops further, okay, and see whether the triangle pattern is able to hit the target. Also, just continue to monitor it. All right. If any more questions, you can just type it down. So I'm going to do now. Okay, this is where you can download the slides. Our colleague will put the link on the comment section, so you can just click the link. You have to answer a few questions, and then you will have that slides to download in your email. All right. If you guys are interested on Affin Huang Investment Bank services, you can also go to this link. Right, if you need to get in contact with them, because they do have the tools, they have the fundamental tools, the technical tools, and also some educational videos and all that for you to actually explore or learn further about investing and trading. Right, so if you you want to know what services they have, please do fill up the form so that they can get in touch with you. All right. Okay, so this is the link to download the slides lah. Any more questions? And this is what I'll be sharing with you guys. Like I said, this is a tool that you can use to identify the right time to get in when the price is in an uptrend. Don't try to chase as price goes higher, because most of the time we'll be falling off. We'll be buying at the highest price and then sell it when the price comes down. Right? That's not what we want. Okay, it's best for at least let the price correct, move sideways for a while, wait for the bus to stop, and then get into the bus and wait for the clue, right? To see whether you should continue on the bus or should we just get out. All right, so any more questions? Oh yeah, I forgot to look at the stocks that you want to look at, right? So let me just share my screen. Okay, hope you're able to see this. Okay, I'm just gonna change this to hold on. Okay, FBI, right? I just want to see whether this particular counter has gone into the setup or not. Okay, so this one has already gone down, right? So if you can look at if you look at this trend, you can see this is the sideways correction, right? Okay, resistance here, resistance here, resistance here, resistance here. So 1, 2, 3, 4 times the price cannot break above that level. And then if you draw the support, you can see, this triangle pattern. Instead of breaking that resistance, it breaks below. So that means it's not going up, it's going down. Okay. So if I'm just gonna look at the price this way, right? So in this case, because this is on a few days ago, it's still inside the correction, but it's getting really thin, right? But the problem is the price still unable to break above that resistance, this green line, right? It still cannot break until instead of breaking the resistance, it break below the support. So simple, isn't it? And the price starts to break downwards and it continues to go down. And if you want to do a target, for example, right? Again, I look at this high. I just use this as a ruler, right? The first high and the first low. And if I'm going to put this down here, and this target is going to be at around 3 ringgit and 32 cents. It may go lower than 332. I'm not sure, because that's just a target indication, right? So yes, I'm not going to expect the price to continue its uptrend at the moment, right? Until another pattern is formed, and then you wait for it again. Or you can use other setups, right, to identify opportunity. Because today, session is only one setup, right? The more setups that you're able to that you know and you can apply, the more opportunities you can identify. Right. So that's FBI. Remember, there's also one more counter that you guys are asking. It's not okay. DNEX, right? So let's take a look at DNEX. Okay, so DNEX has been this one. The correction takes a much longer time, right? But okay, so if I'm going to draw that resistance line, you can see that the resistance is already broken instead of the support, right? And because it takes a longer time, okay, one of the things about chart patterns, if it takes a longer time to form, it also takes a longer time for that pattern or that target to be achieved, right? So I can actually just change this to a weekly chart to remove those noises. All right, so if I change to a weekly chart, then you can see the triangle pattern even more clearly. Okay, so we actually have the price already broken that resistance level. Okay, but it's going to take some time. Normally, if you take a look at how long that triangle pattern is formed. So this is the first highest in March, right? All the way up to October. So March, April, May, June, July, August, September, October. It takes about 6 months to form the triangle pattern. And if that's the case, normally it will also probably take around 6 months, less than 6 months for the price to reach its target. So this is it's a longer term one. All right. So the price already broken out. And if you do a target for this particular pattern, so the first high and the first low, and again, you always add it from the breakout here, that will give you a target price of 117. Okay, 1 ringgit and 17 cents for the next. Okay, as long as the price stays above that support. Right? So where's the support line? This is a support line lah. Okay, I'm just going to change the color so that you can see better. Change it to blue. So this support line, right? So you can just draw this exponentially going forward. So as long as it stays above that blue line, then there's a chance for the price to go to around 115, okay, within 6 months. So it's going to take a longer time now. All right. So you can apply the same thing. So this one just broken out. So you may want to look at this again. This is not a recommendation whatsoever, but this is again, it's just a case study, right? That once the triangle pattern has been confirmed, you're going to expect it to move to the target price based on the triangle pattern, which is 115, as long as it can stay above this support line. And currently at about 73 cents. Okay. So I guess that's all the time that we have for tonight. I hope that tonight's lesson it's more educational today, would help you to identify opportunities. Okay, you just need to have a simple chart because there are no indicators involved. This is pattern based, right? So I hope that you are able to take this setup here to help you to identify more trading opportunities lah. All right. So once again, thank you so much for joining us. We'll see you again in our next session. Till then, have a good evening.